You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vachranjani. As 2025 year ends, it's very important to take a look back and see as to how commodities have done. Gold, silver, copper, etc. have outperformed equities in a very big way. And there are a couple of reasons, of course, for each of these each of these precious commodities, in fact, because of which the kind of rally that we've seen. But it is also very important for you as an investor to understand as to what should be the proportion of these precious metals in your portfolio, what is the outlook looking like in 2026, and to discuss exactly this, we're joined by Kunal Shah, who's the head of commodities research at Nirmal, and Mahajan, who's the managing partner and CEO of Complete Circle Wealth Solutions, joining us now. Welcome to both of you, gentlemen, and season's greetings to the both of you, and thank you so much for taking out the time. Kunal, I'll start with you first. The crazy rally, that everybody's been talking about in gold, silver, copper. Firstly, just to give viewers a brief about why this rally has been caused in 2025, and then second part of that question would be that going forward in 2026, what is the expectations from all of these three commodities?
Okay, so you mentioned about the three commodities and then broader commodities. So I think one of the major reasons why this rally started was the de-dollarization trend that everyone after Russia was sanctioned by US and Europe, and we've seen their asset being freezed. From that day onward, central banks were seen diversifying their reserves into commodities like gold. This was a starting point. But then this got aggravated because of the fact that in 2020, after the COVID, till 2025, we have not seen any meaningful incremental growth in the supply side of most of these commodities, and there were a lot of commodities which were trading in deficit. So like, for example, silver, copper, these are the commodities which were trading in deficit. So these commodities gave you the super alpha because of the deficit which has been created over the last 3 to 4 years. And the supply side was not responding post-COVID. We've seen the tepid demand growth from China, and also the supply side not responding at all. So silver supply side, in spite of the 3, 4 years of bull run, is static. And the market is having a deficit of 8.5%, 10% from last 4 years. So why prices will not rally the way they have rallied? Shortage doesn't have in shortage, you cannot generally predict the upside, how much upside a commodity can go. And that is what has precisely happened with many of these commodities. Third most important reason is the Trump tariff. The Trump tariff has led to a multipolarized global economy where everyone is trying to make sure that because of the multipolar world, the supply side, China is following. China, which is basically the major producer and consumer of commodities, they are following involution policy. Under that involution policy, they are cutting the excess capacity of the metals and other commodities. And also at the same time, they know that their exports are going to be tepid because of the tariff. So we've seen supply side further getting squeezed because of the tariff, and the demand from the BRICS and the Asian counterpart remained pretty strong. So this was bound to happen. And fourth, the last most important thing, what has happened is fund flow into commodities because of the expectation that the aggressive rate cuts are going to take from the US and the developed part of the world, and there can be another round of money printing which can take place because of the higher debt levels which are not sustainable.
Right.
So these remain the key reason why commodities did what it did in last 1 year.
Absolutely. And Kunal, going forward, what are you expecting in 2026? Is this rally here to sustain?
I think the broader bull run will continue to stay there, but the return expectation should be tapered down. Number one. Number two, the commodities which are still in deficit may have a chance that they can do better at the end of the 2026. But the fact remains is, after such a big outperformance, I would not increase my portfolio allocation towards this segment. And in fact, I would say that you can reduce some of the exposure and put it elsewhere rather than increasing it at these levels. these are the good time, where you can take some profits on the table and wait for the dip and buy again.
Absolutely. I think that's a perfect way for Kshitiz to step in right now, right, Kshitiz? Because as Kunal mentioned, that you can probably even reduce the exposure of these precious metals in your portfolio. My first thing, before we move on to reducing it from your portfolio, first thing I think, and this I've been hearing from our viewers, because they've been saying that because of this rally that they've seen, they've been increasing the stake of gold and silver in their overall portfolio. Kshitiz, is that the right thing to do when the when the entire pack of this precious metals has been rising continuously, as compared to the exposure that the equity and debt has in their overall portfolio? Is that the right thing to do?
Well, interestingly, we always say that gold and silver should be around 7 to 10% in overall asset allocation. If you see overall scenario right now, what is happening in the markets, we have to look at it that last 1.5 year return is almost tepid. Hardly we have seen returns in the market. So that is actually give us opportunity in equities right now, because valuation wise, equities broader index is at 19 trailing P 1 year forward. 1 year forward P. I'm saying you have better opportunity in equities, as well as on the fixed income side. Also, you see there are rate cuts. What has happened? Almost 125 bips in this year, but it has not transformed in terms of its replication into exactly 10-year GSEC or government bonds. So I'm saying right now in fixed income also you can expect a better yield and better return. That's what you can see coming your way. But yes, when it comes to allocating towards gold and silver, I want people to to have the right judgment and use precaution while allocating toward this asset class. There's a bull run in this asset class, and what I can see is that a systematic way is the right way. If you are already exposed and more than 7-10% in your liquid asset in this asset class, there is no need for you to put in more. But if you are not, then staggered manner is the right approach. You should stagger your money over a period of time, maybe a STP or a SFA route. And there are certain funds, in fact, interestingly in the market, where the fund manager decide how much silver and how much gold. So there's a combo fund. So I think you can go for that type of fund rather than just doing it silver and gold individually yourself.
Right. And then coming to the part that Kunal mentioned about, right, that if somebody already has an exposure, probably that is exceeding that 7 to 10% mark, right? Because 7 to 10%, considering that you are doing this from a long-term perspective, right? So beyond, over and beyond that 7 to 10%, Kshitiz, do you think that somebody who is already kind of holding their stake in gold and silver should now kind of take money off that and invest into something else?
So broadly, asset allocation should be followed. I'm not a very firm believer that one should book profits in gold and silver. I feel that the further allocation should not go in gold and silver, and you can look at a good valuation on fixed income and equity side where you can put your money. Yes, if there's a remarkable difference between your asset allocation, means that you are around 20-25% in gold and silver, then yes, I think it makes sense. The way the prices are inched up, you can book some profit and you can allocate. If you still want to have allocation toward this asset class, you can allocate toward a multi-asset fund or a pure equity or a fixed income fund. Yes, it can be done.
Okay. All right. Kunal, you did talk about, in terms of these metals, in terms of silver, copper, etc., have their own reasons as to why they have rallied, right? Gold is always being viewed as an investment opportunities, but silver and copper till now were being viewed as commodities, right? And essentially they're used in industrial purposes, and that's why a lot of traders use them rather than from an investing, perspective. So just want to understand that from here on in 2026, when you said that you cannot expect the same rally as it did in 2025, but considering that the prices are still expected to continue to go up, how would you play by these commodities, especially silver and copper? And if not these commodities, any sectors related to these commodities that one should look at?
Okay, so first thing is whether this bull run will continue or not, okay, or whether this is an end or for that we have to come do the reverse questioning whether the US debt is going to go down sharply. No. Whether the geopolitical equation of the world is going to improve drastically, the answer is definitely no. Third is, what is the solution for the ongoing debt crisis? Answer is, we don't know. Fourth, what the fundamental value of the US dollar is going to increase significantly? The answer is no. So are we again going to go back to the globalization era where there's going to be free transfer of goods and services? No. So all of this question makes me believe that the bull run is likely to stay. Okay. And hence that's the reason why I would say that one should remain invested, or if somebody has booked profit and it is correcting, you can again re-enter it. But the return, I mean, we've seen this 75% return or 140% return. These are very difficult to achieve in 2026. So you should lower down your return expectation to 10 to 15 or perhaps 10 to 20%. That is, if that kind of return, if you are getting after this kind of stellar performance, it is a very big thing. So silver, to be very precise, I would just like to explain the scenario. China is the second largest exporter of silver and one of the major producers. And China is saying that they are going to have a export control of this commodity. So there is not going to be free export of silver. China will come up with a license or the quota, whatever. They are yet to speak on it, and they will decide whom to sell silver. Okay, so already a commodity is in a deficit, and China is trying to control the export. So the shortages will be quite bad going forward. So these are the reasons, why silver will not crash and go back to $30. Number one. Number two, coming to copper. Copper, there is a excessive smelting capacity in China, and the whatever concentrate you get from the mine, you process it, and then it becomes a refined copper. So now the process which we call, that is a smelting operation. The smelting operations in China are going to get curtailed because of the involution policy, and that is the official draft by the Chinese government which has come during last week. And the concentrate side is already weak. So all the major copper mines are getting older, and that's why the quality of ores is not great. So even the bull run, there can be a bouts of profit taking and correction, but the fundamental for the copper also remains quite strong. After a 35-40% rally, it can correct by 10-15%, but that would again make it very attractive for investors who missed this rally.
Makes
And they
sense.
should be again investing in metals like silver and copper at dips.
Right, got it. Kshitiz, my one last question to you would be with regards to just gold, right? A lot of people still don't understand, the different ways of investing in gold and what would be the right way to invest in gold. Give us some perspective there.
So as I said, it's a good hedge in the portfolio, and
Yes.
The way it has rallied, it has been showing that it can be a good asset allocator product also. So when you buy a gold, so there are various forms. We all know that we buy physical gold, but you can invest through ETFs. You can invest in mutual funds. So there is a fund of ETF is mutual fund. There are various AMCs which offer you a gold fund to invest. You can buy a digital gold also. Interestingly, in India, a gold which you are buying digitally, or let's say through mutual fund, it has to be backed by a physical gold or a physical silver. So I think there are a lot of ways through which you can invest. Having said that, keep on evaluating your assets, your liquid assets, and as per that, you should invest. The good part is, when you invest through a physical gold, whatever price escalation is there, whenever you're selling, it becomes a part of your tax liability. But when you invest through a mutual fund, then first of all, there is no need for you to preserve that gold, and there's no question about the purity part. And at the same time, if you hold more than 2 years in FOF, then you have this opportunity where you get your taxation benefit long term, which is 1.5% only, whenever you sell that gold on the capital gains.
Okay, all right, Kshitiz. Thank you so much for that, and Kunal, of course, to both of you, thank you so much for giving us those insights. I'm sure our viewers will now have a perspective as to how do they go about these commodities, and with the kind of crazy rally that we've seen so far. So thank you so much to both of you gentlemen for taking out the time and speaking with us at NDTV Profit.